I almost got this mic ripped off my face, but I remembered I didn't have any curry last night, so we should be okay. I think a lot of people have touched on, good morning everyone. I saw you guys having quite a bit of a big night last night. Hope everyone has got the capacity to focus through the next hard discussions of economics and politics. I've been trying to summarize what the world economy has been like over the past, call it half a decade. And I suppose thriving in flux is one way of capturing it. But really, what it's come down to for me is that we are now in a world where the occurrence of the unexpected has become a norm, particularly since the pandemic. And if you think about last year being the hottest year on record, you think about the war in Ukraine raging in year 3 of that war, you think about the conflict in Gaza, and everything that's intensifying over there, and I suppose Norway, like ourselves, have gone and put their foot in it as well. And a lot of these factors that are happening that really put us in a position where we really don't know where things are going to go. You overlay that with more than 50% of the world population going into elections this year, you know, it really becomes a bit of a tricky and volatile scenario, because if you think about elections against the backdrop of what we might call deglobalization to some extent, or some people might talk about shifting supply chain patterns, mostly driven by coming out of the pandemic, where when a lot of countries were opening up, China in itself had their zero COVID policy. So a lot of supply that was expected to fuel economies out of China couldn't get out of there because, you know, they had their zero COVID policy. What ended up happening is that a lot of countries started asking themselves, can we hedge ourselves from this China risk? Can we find other partners to potentially provide us with goods where some countries may not be able to? And on top of that, you think about a scenario where, you know, we find this notion of the global south, you know, West-aligned countries, global south countries, and non-aligned countries. All of this creates a lot of flux for ourselves. But of course, with all of that comes a lot of opportunity as well, as we always mention as bankers. And therefore, we need to understand really what the world is worried about and where we can find ourselves, I suppose, finding these opportunities and extracting these opportunities from these events. So here we go. Just as a start, the World Economic Forum ran a global risk perception survey. Basically, you ask each country, what are you worried about? What are your top 5 risks? And then you consolidate them, you find global risks. And then I decided then to strip out South Africa because this is our economy. And you can see over there that we're worried about extreme weather patterns. You know, you think about El Nino and La Nina, where in some instances you expect dry weather patterns, and you start seeing patches of rain, you know, where you expect dry weather patterns, and the converse has become true as well. And the risk there is that it puts a lot of our agriculture at risk. And if you look at over the past little while, if you strip out food price inflation from this inflationary number that we've been seeing over the last little while, you realize that, you know, it starts becoming risky where we're trying to deal with global hunger and the likes. And of course, if we then look at South Africa, for instance, and you think about, you know, the social grants that a lot of our population lives off, if you find inflation, food price inflation, eroding the purchasing power of that cash that they get, month on month, they get to buy less and less with that money. And of course, it creates a bit of a weird situation when it comes to state fragility. I'll touch on that a little bit later. Secondly is AI-generated misinformation and disinformation. With the prevalence of social media and how it's become the source of information for a lot of people across the world, and you think back to when Donald Trump really became president, on that Donald Trump story, we found ourselves in this situation where if Donald Trump is not indicted, he's going to be president. It is so vast and so scary where the world is right now, particularly from an American perspective, that it puts a lot of the world at risk as well. And if you think about when he was elected initially, there was a lot of talk about the election being rigged. And there wasn't a tinkering of the counting of votes. What really happened there was that someone, Russia, decided to channel a lot of misinformation into social media platforms, which in itself shifted voter perception. And that phenomenon then, you can start seeing how scary it is when you've got such a big election and technology is coming at us at such a fast pace that sort of misinformation may really sway elections. And we might find ourselves in a bit of a scary place where people who really shouldn't be elected are elected. Third is societal polarization. Nothing explains it better than the wars that are raging on. Cost of living crisis, we all been worried about inflation. It has come down dramatically from its peaks, but it's stuck quite high. We see it in South Africa. We target 4.5%. The last inflation print was at 5.2%, and it seems to be sticking at that level quite relentlessly. In America as well, they target 2%. They stuck at inflation that's above 3%, and it's fueling this notion of interest rates remaining higher for longer. And really, until we see that inflation coming up quite dramatically, the notion of interest rates coming off maybe a little bit further away than what we expected. And lastly, cyber attacks. We're going to need to protect our businesses from technology attacks. If you think about what happened to the Central Bank of Bangladesh, hackers went into the system and they tried to get $1 billion out of there. By the time they woke up, they had taken out about $100 million. So this is really scary for the world. And of course, because we're an open economy that is affected by all of these factors, we can't live in our bubble, even though we're still worried about bread and butter issues. I mean, energy supply is a real thing that I've been worried about for the past decade plus. I've been asking myself whether we are at 57 days with no load shedding. Is it 57, 58? And there's a lot of trust deficit with the government about whether we see load shedding after the election and whether this is just an election ploy. But, we talk to the guys at Eskom, they're saying they're burning less diesel or they're burning diesel strategically for peak hours. I don't know what that means, but I'm a little worried. And we'll have to see what happens in 2 weeks' time after the election. And of course, that energy impacts our economic downturn. We know that electricity fuels a lot of our economic activity, which then affects employment and unemployment, which then informs your state fragility. And we talk state fragility, we talk about what happened in the riots in 2021 and the likes. We have this fragile state. And you overlay inflation, food price inflation, on top of these social grants that are eroding value over time, we suddenly find ourselves in a bit of a state of flux. But we know that, private-public partnerships have got an ability to turn this economy around. If you think about how the electricity issue has been addressed by South Africans, we've had the private sector that's come in, to build rooftop solar solutions, renewable energy solutions, and the like. And by our estimate, that's been about 2 stages of load shedding that has been impacted and reduced by the introduction of these renewable energy projects. And so the economy going forward looks like it's going to rely a lot on yourselves and a lot of other private players to be able to solve a lot of our problems. In Johannesburg, we've seen it happen. The private sector stepped in on the traffic lights when we're battling, at a smaller scale. But those are the private-public partnerships that really are on the cards going forward to turn this economy around. So speaking about technology and the speed at which it's coming at us, I decided to ask ChatGPT what it expects from 2024 economy, and this is what it has to say. In 2024, the global economy resembles a roller coaster ride in an amusement park run by eccentric billionaires. You can think about Elon Musk. I'm sure you can think about other players as well. Some countries are zooming up, shouting, "We're back, baby," while others are stuck in the line arguing about who gets the front seat. If you think about South Africa and BRICS, we've been a small S, we've been fighting to become a big S, and now that BRICS society has expanded quite dramatically, and there's a lot of questions about whether we'll be able to extract value for ourselves. Anyway, inflation is playing hide and seek, and supply chains are tangled up like headphones in a teenager's pocket. That's self-explanatory. Meanwhile, tech wizards are cooking up innovations faster than you can say selfie stick, if you guys remember that. And climate change activists are railing up like it's the world's biggest game of Simon Says. So there's been a lot of protests, especially if we focus on the banking sector a lot. If you are funding fossil fuels or the like, you'll see a massive protest outside of your offices. And a lot of these climate change activists think that the move to green energy is going to happen overnight. And unfortunately, that's not the case. And there's a big debate about whether ourselves, and especially ourselves with the massive coal reserves that we have, should be on this fast track to get into renewable energy, and there's a big debate happening there. So anyway, it's a wild ride, folks, so hold on to your wallets, please. This slide I found very fascinating because it really tells us about inflation-adjusted returns from a policy rate perspective and how much each country is offering you. So imagine yourself being an international investor sitting somewhere in London or New York. You've got all these dollars that you need to deploy, and we know that inflation erodes purchasing power of a currency. And therefore, if you think about your policy rate versus where your inflation rate is, what you end up being left with is your real return. I decided to just map this real return against rating scales of each country. So at the bottom there, I used Moody's rating scales, and the further out you go to the right, the riskier a country is. And what's important for me to note is that the amount of work that the central bank has done to rein in interest rates versus where our competitor countries are and versus where we are on the rating scale. We know that the further out we go, we become much riskier. But from a real return perspective, we are competing with the likes of America, your Eurozone, and the UK. It doesn't seem like a sustainable solution to be in. And the way I read it is that the Reserve Bank in itself has been very, very cognizant of the fact that the South African economy needs very low interest rates in order to bolster growth. And you can see where Brazil is. They ranked directly exactly what we ranked. They're offering a real return of 6.81%. And of course, if you hold back your interest rates in a very risky environment, and you're very, very risky yourself as a country, what ends up happening is that funds that you should be seeing are redirected to other countries, and it starts leaking in your currency. And if you look at the bold numbers on your left, you'll see that, comparatively, because Brazil is paying higher interest rates than ourselves, they see a much stronger exchange rate compared to ourselves at 18.15. I mean, the last I looked on Friday, we hovered around 18.50 odd. We saw this weakening come in, primarily because we're in such a high-risk environment. Elections in themselves bring about a lot of high risk. And that's where we are. Russia is a bit of a different story. The last trading price was 118 to the dollar. And there's been a lot of talk about debasing of the dollar. My sense is that we're very far away from that. The dollar remains the dominant currency of the world, and it's going to take a very, very long time if we were to debase it. But there's a lot of talk of that because, the Russians are not happy right now. Their dollars were confiscated when the war started, and there's been a lot of talk about whether those dollars that are sitting in America are going to be used to fund Ukraine and to arm Ukraine for this war. The international monetary authorities think that that is a little bit unfair, but what it's really done is that, it's put everybody's back against the wall. And there's a lot of talk about how do we protect ourselves from this confiscation of dollars from a U.S. economy perspective. And you'll see that the Chinese government, over time, where they were the biggest holder of U.S. Treasury bonds, what they've done is that they've started selling those off and buying gold. And you may have seen over time that the gold price has hit a record high, because a lot of central banks are thinking, and a lot of countries are thinking, this America story we can't really trust anymore. There's been a lot of trust that's been broken, and therefore to really hedge ourselves, rather hold gold. And we might be going back to that era where, gold becomes the standard and gold becomes the one that backs country currencies. And lastly, I just want to touch on Turkey. As you can see there, I couldn't go deep enough in here to show how negative they really are. But last year they had the election where President Erdogan was re-elected. Leading up to the election, when the rest of the world was increasing interest rates, they kept the policy rates at, call it 8.5%, when inflation was going through the roof. President Erdogan then, leading up to the election, when inflation was really eroding people's purchasing power, what he did was that he increased the public sector wage bill by, call it 40-50% to get himself over the election line. He won the election, and soon after that, inflation was through the roof. They've raised their policy rate from 8.5% to 50%, and they're still struggling to rein in that inflation number. And you can see that they're offering now a real interest rate of minus 20%. You're getting no value if you're investing in Turkey. And really, what we really see there, and the big point that I'm just trying to make there, is that there's a lot of talk about independence of our central bank. If we find ourselves tempering with the independence of the central bank, we might find ourselves in that sort of scenario. But the currency is very important for us because we import so much. So I figured that let's just look at where the currency is. That's the trend of the currency and the orange line over the past 24 years, call it. And that turquoise line that you're looking at is really the differential between where our policy rate is, the repo rate, and where the US Fed funds rate is. Okay, so repo rate minus fixed fund rate tells us where the differential is over time. And that differential becomes very important because if you think about America being a risk-free country, any difference that you're paying above America as a country will determine whether you're able to attract foreign flows or not, okay? And I'm just gonna pause there and say, this volatility, I've got my colleagues here, I've got Liesel, I've got Kuben, Clayton, Damien, Bongani, who we help a lot of our clients navigate these sort of volatile environments from a funding perspective, from a risk management perspective, FX and interest rates. So if you're really interested, we've got some of our experts here who will talk you through the underlying mechanisms of funding your businesses. So anyway, I decided then to split this graph into two, and I've decided to call, firstly, the second half that we want to call it the years of famine. We know that what the political environment has looked like over the past little while. We know dollar rand touched close to 20, and there's a lot of very scary events that happened over the past little while. If you think about, somewhere in 2015, we fired our finance minister in the middle of the night. We lose investor confidence. That weakens the rand. And of course, COVID-19 happened. And after that, towards the tail end there, where you see that last spike, there was a weird ship that docked in Simonstown, and suddenly South Africa was being mentioned in the same sentence as sanctions, right? That got me very scared, and it got a lot of investors very scared as well, And of course, that spiked the rand to just under 20 to the dollar. And yet, back to the monetary story conversation, you look at this differential between ourselves and the US over time, this differential is now sitting at, call it 2.95%, right? That means that the central bank has really compressed this differential between ourselves and the US, so much so that no one is really incentivized to bring their money into South Africa. And of course, every time money leaves the country, we see it spiking in the rand. So that's the bad story. We're all engaged citizens. We know what the drivers have been over the last little while, so I'm not gonna spend a lot of time on this. I want to talk about the years of feast, 2000 out to call it 2013. Around this time, there's a lot of nostalgia that lives in me. If you think about going into 2010, vuvuzelas at that point in time were an annoying sound, but you hear that sound and there's a bit of nostalgia if you think about the energy in the country around 2010. Our police were really jacked. It didn't take us forever to find criminals. If something happened today, a few days down the line, you found who the person is and the likes. That's the sort of stuff we want. If you think about going into the .com crisis, we had a very strong consumer at that point in time. That differential between ourselves and the US was 12.5%. The repo rate and the prime rate was hovering around 20% at that point in time. But the household was strong enough to absorb such a shock because, unemployment rates at that point in time was 20%, trending downwards. We had a fiscal surplus. We had more money than we knew what to do with. And there was a lot of very positive things that were running through the economy at this point in time. And this reminds me that the memory of this economy and getting it pumping the way it was at this point in time is not too far away. Dollar rand at 6. I mean, and a lot of you in this room ran this economy when this was happening, and what needs to be done. And I suppose if we put together your will and political will, hopefully after the election, we can really get this economy running to these levels. But we're not there. Unemployment rate is now at 32.9%. What we're looking at here, please excuse the numbers, but just follow me here. We've got the national number in bold on the top right. And what we have here, decided to strip out the big battlegrounds going into the election. That's Gauteng, that's KZN, that's the Western Cape. There's a clear correlation between ruling party support and where your unemployment number is coming out at. And there's a clear correlation, if you look at the Western Cape, between the support that DA is getting in the Western Cape and the unemployment number in the Western Cape, right? Gauteng, of course, a lot of people leave their residences to go into Gauteng to seek employment. So we expect those numbers to be high, but that 32 number is really not sustainable. Western Cape is seeing probably the best unemployment number in the country, 21.4%, an official unemployment number. Of course, an expanded unemployment number then says, people who are able to work but have been discouraged, you bump that number up. What scares me though about is how Stats SA defines unemployment. You know, they go and they do the quarterly labor force survey. They look a week back and they ask you, did you find any paid employment in the past week? And if your answer is yes, then you're considered employed. But let's consider what that employment might look like. If I drive around Johannesburg and I find a guy on the side of the road and I ask him to come fix my tap and I pay him $200 and that's all he ever did, Stats SA doesn't have him in these employment numbers. And therefore it says if you take a part of that population and you overlay them on top of these numbers move dramatically up as well. So this is what scares me. And when we talk about state fragility, this is exactly what I'm worried about personally. Of course, at a youth unemployment perspective, that number is unsustainable by any measure, right? You have the most active part of your population sitting idle, doing nothing. Drugs are rampant in our streets, as you all know. It's really scary. Alcohol consumption is through the roof in that category. So if you asked me, if I were president, Gav, and you asked me where I need to focus on, I think this is probably where we need to focus on. We need a lot of small businesses coming into the economy to be able to drag this number down. I saw there's Hermanus Brewery, a couple of guys and ourselves were talking about, you know, these small little shops that pop up, Hermanus Brewery, Clarence Brewery, and these small businesses really employ 5-10 people. Suddenly you have a lot of them that can absorb this number and really get this economy going. And lastly, if you look at your GDP and your population growth, last year we posted a whopping 0.6% GDP growth against a population that's growing by 1.4%. Effectively tells you that South Africans are getting poorer over time. Yeah, it's not sustainable. Some people actually say, if you take your population growth and you add inflation, so let's assume inflation is right on target at 4.5%, 5.9%, that's where we need our GDP growth to be able to at least hold this thing steady. Right? And anything above that, of course, starts moving us forward and we start lowering that unemployment number. But those are the numbers that are, and that's what we need to deal with. And of course, if we say Africa is the future, you know, then the future of Africa then lies in its youth. You know, if you think these are population pyramids, and you can see Nigeria has a near perfect population pyramid. Nigeria and South Africa's numbers are actually quite similar. But the way we run the country is actually very different. If you think about Muhammadu Buhari, for instance, he knows very well that there's a clear correlation between what the election outcome is versus what your unemployment rate is. And therefore, he stopped publishing his unemployment numbers. And of course, you know, in South Africa, we need to take comfort in the fact that a lot of our institutions are still intact. We still see and have clear visibility of where the state of our economy is. What's risky, though, if you look at Japan, and as a proxy for developed markets, Canada, and a lot of those economies, is that their birth rates are very low, and therefore their population pyramids are starting to invert. And the risk that we run in this environment where skilled people can't find employment, yeah, doctors are sitting at home after training, they can't find employment, and the likes, we'll find that these economies can easily switch the immigration laws and start attracting these skilled workforce out of South Africa, out of Nigeria, out of a lot of countries on the African continent. And suddenly when we start losing those skilled people and they move abroad, we'll start seeing this dislocation from an income perspective. And long term, you'll realize that we'll continue getting poorer when other countries continue getting richer because we're just not taking care of our skills base. That's a bit of a risk that we run over there. And therefore, we need to do a lot of investment and put in a lot of investment in upskilling our youth so that later on in their lives, we have strong individuals that are running this economy. And this is effectively the talk about future-proofing ourselves. I was talking to Devon last night, and he was telling me about all the work that he's doing, you know, to connect trained youth to corporate needs. And that's the sort of environment that we need to start moving into, you know, where we have this clear relationship between the skills that corporate needs and the skills that are available on the ground to ensure that we continue to bolster and future-proof our country. Okay, that was hard for me, but I love seeing Boki over here. And I don't know if you guys watched Chasing the Sun. I watched that, and it was so intense for me, as though I didn't know what the final outcome would be. But what Boki here reminds me of is the potential that lives in the country. this country that's at the southern tip of Africa, can be globally competitive and win. Given the right leadership, I've got something going on for Rassie myself. I don't know him personally, but I really like the guy. And the grit that he's put into that Springbok team, in order for us to win a back-to-back is really, really amazing, right? It is incredibly amazing what he's been able to do with those boys and the amount of pride that it's filled me with. But again, if you think about that era going towards 2010, and you think about what the Springboks have been able to do for our country, we can learn that South Africa in itself can really, really be globally competitive, and we can win on a global stage. And therefore, let's just lift our heads a little bit and think about where we are as a country relative to the rest of the world, yeah? Because we often are internalized, and we think this is the worst place to be on earth. This prosperity index, what it does is that it measures under 12 categories from safety and security all the way out to the national environment, and it gives you a ranking out of 167 countries, okay? And from that point onwards, it aggregates everything and it gives you a ranking. What is really fascinating for me is that over the past 5 years, South Africa has been slowly moving up world rankings. We were number 85 at a point in time, and we're now number 75. And it suddenly tells me that there's certain things that we can really focus on in order to make this economy tick. One measure that is really not great is safety and security. We are trending towards being in a war zone. Gavin was talking about safety and security at a point in time, and crime and corruption. We really need to get that moving very quickly. We need to strengthen our police service. We need to strengthen the NPA and the likes in order to start shifting that number up so that we can feel safe and really enjoy the freedoms of this country. But another thing is that, of these 12 categories, about 7 of them, South Africa ranks in the top 50% of the world. Let's look at where we do really good. Personal freedom. We rank 38 out of 167. What does that mean? It means that we can go into the streets, we can protest and say whatever we need to say about the president, and everybody will make it home fine, right? Not so much in Singapore, for instance. People tend to disappear, right? Our constitution is very extremely liberal. We can do all sorts of weird things. We can burn the flag, it's a digital flag, but we can burn the flag, and everyone will be okay, Let's talk about social capital. What does that mean? Social capital means that all of us can get into a room like this, network, grow ourselves, grow our careers, grow our businesses. Because South Africans are open, the notion of Ubuntu still lives within the South African fiber. Not so much in Japan. Right? You land in Japan, you're not part of the Yamazaki clan, you ain't gonna make it. Okay? It's not gonna happen for you. But there's a lot of stuff that we still need to do as well to move our ranking upwards. Health, NHI. As it's coded, a lot of professionals are really not comfortable with it. But I think the strategy might be to let it run through the courts so that at the end of the day, you have a clear and solid policy that might be able to move the country forward. Universal healthcare is an important measure. The way the government has gone about it, the time at which they've decided to sign this bill makes me a little worried about what the real intention is. But it's something that we need to look at. Housing conditions, we've got a massive housing problem in South Africa. That's something that we need to work on. And if we can talk about the natural environment that talks about fossil fuels and the like, we're still way off from that because, we're still an emerging economy that needs these fossil fuels in order to bump our GDP up. Education, an important piece, upskilling our youth. We need to invest in education, quality education. This 33% pass rate, maths pass rate doesn't sit well with me. We need to do much better than that as a country. And the likes. So, we tweak those things, we start moving up the world rankings, and we really become a very competitive economy. An economy that doesn't need a lot to turn it. We've got about 28,000 kilometers of rail track running across the country. We've got about 30,000 kilometers of transmission line running across the country. We need to add 14,000 more, and the like. So we get those things right, we suddenly find ourselves in a great economy, great weather, lovely golf courses, and everybody loves to be here. I mean, it's a beautiful country. So lastly, this is the work that's being done. There's a lot of work that's being done at Transnet. They've recently gotten a new CEO, and their capacity is up about 10%. Eskom, 58 days without load shedding. I mean, there's a lot of work. Kusile is now online. There's a lot of streamlining that's been done over there. And of course, there's a lot of talk about the NPA helping out Shamila with potentially private funding because she's mentioned time and time again that she doesn't have the resources to pay very skilled prosecutors and the like. So there's a lot of work that's being done. Business Leadership South Africa meets with the presidency, call it every 6 to 8 weeks. 100 CEOs of the best of our corporates meet with the president in order to drive this. And these are the public-private partnerships that I talk about that are moving this country forward. And from this point, I just hope that after the election, all this positive momentum that's been built is going to continue. Thank you.